Investors, it's been a minute or so since my last video, and since then, I want to pointlessly let you know that I have successfully moved apartments, all while Joe Biden and House Speaker Kevin McCarthy have been hashing it out over this debt ceiling deal. Now, both of which matter equally. Okay, well, perhaps not. My move was way more important than the debt ceiling deal, but more on that to come, I promise. For those of you new here, I'm Ari, your go-to dividend investor here on YouTube, with a very simple mission to deliver economic insights to you so you can understand what in the world to even focus on, and moreover, here to share dividend stock ideas that will ultimately help you drive more profits and increase your passive income. With that said, let's dive right into these insights and dividend stocks. First things first, I want to key you right into where I personally stand with my account sitting at $113,633.87. Why? Because not only has my account remained in the green during the last few weeks of market insanity, but it has only continued to grow without me having to add even a single cent to it. Now, that's not only the power of dividend growth investing, but literally the reason why you want to invest into quality companies. And on the other hand, in order to pick these quality companies allowed me to revert back to what I always share. Macros matter, which is why I share economic insights on a weekly basis so you as an investor can remain informed, but also just stay focused on what really matters. Because believe it or not, my move into this apartment was literally more important to the both of us than the debt ceiling saga. And if you were watching the news over the last few weeks, then I'm sure you were consumed by all the negativity. Now, yes, if the United States defaulted on our debt, that would be bad, like really, really bad. But the outcome was highly unlikely, which is why I was saying that it was more of a political affair than an economical one in the first place, and it wouldn't be until the nth day of the nth moment that we would see Biden and McCarthy really even working on our behalf, like we're seeing right now with the deal officially almost solidified. Man, oh man, that's why I hate politics. Anyhow, if the debt ceiling wasn't as pressing, the question really becomes, what should we be focused on? And while considering our market mandates, the driving forces of market volatility remain interest rates and inflation, we need to continue to keep our eyes on data sets that can cue us into the Federal Reserve's next interest rate hike decision, because we very well could see another interest rate hike. Even the Philly Fed President Patrick Harker said this past Wednesday that while he's leaning towards a vote for a pause, it's really dependent on the strength of the labor market. So that's when we take a look now at our latest employment report, which just depicted how strong the US labor market remains, which makes for green means go juice for Powell and the gang to keep raising rates. Now, either way, even if rates aren't raised, they're still awfully high right now at a terminal rate of 5+%. So in the coming months, when both big businesses and consumers are pressed with high inflation and elevated interest rates, only the strongest will really survive. And therefore, it all comes down to your portfolio prep right now, where being prepared for the worst while still planning for the best is the best strategy. Which leads us to our 7 dividend stocks that you should have bare minimum be adding to your watch list right now, with the first being the leading home improvement retailer in the United States, Home Depot, ticker symbol HD, which has just been taking an absolute beating year to date. It's down nearly 7% on the year, trading for $292 per share with a P ratio under 20 at 17.8. Now, could Home Depot continue to fall? Sure, and it may, but I'm not here to try to time the market, and therefore I'm willing to fork up some cash into Home Depot even though it's $33 away from that 52-week low. Because quality is almost always worth it in my opinion. Now, why Home Depot and why now when home starts are down and overall home construction has been slowing while even home sales are down? Well, simple. In due time, we should make our way back into a bull run when penny pinching will become keeping up with the Joneses once again. And in other words, Home Depot will be back on the up and up, which is why we can see top analysts already favoring Home Depot with upside potential of almost 8%, coming up to a share price of $315.79 per share. Not to mention, smart money is already scoring more shares worth of Home Depot, and if it falls, I'm sure hedge funds will only continue to load up. Now, in terms of Home Depot's dividend, while it may be the lowest yield on the day here, it's going to remain above its sector average, coming in at 2.66%. Moving to our second dividend stock, I want to dive right into one that I can almost guarantee you that you haven't thought of before. And if you did, well, let me know in the comments down below because it's quite a gem within the advertising space. Now let's talk about Interpublic Group of Companies, ticker symbol IPG, which is a consumer advertising, digital marketing, communications, and public relations company that amidst our current economic backdrop has actually been performing quite well, as it's up on the year by over 12%, yet trading for just about $40 per share with a PE ratio at 16.4. Now IPG will get hit pretty hard amidst worsening economic conditions, but it will also perform well once that turnaround comes about, especially in a comeback market, whereas businesses are going to look to scale once again. Which is why we see plenty of smart money making their money moves into IPG, in addition to positivity from analysts with almost 9% worth of upside expected, with that share price rising to over $40 per share. But because we are here for the dividends, IPG will reward you handsomely with their dividend yield coming in at 3.13%. All right, investors, before I now dive right into dividend stock number 3, this is a direct, in-your-face call to action, because if you've received any value from this video thus far, well, please help me in reaching more dividend investors just like yourself by tapping on that thumbs up button. And on the other hand, if you are enjoying this content, I'm here to invite you to join me on this whole journey by subscribing so you'll never miss another video. With that, let's move right on to dividend stock number 3. It's Tyson Foods, ticker symbol TSN, which is the world's second largest meat processor when it comes to beef, chicken, and pork. So let's take a moment here to appreciate that, because that in and of itself should provide plenty of confidence despite all the earnings hardships that Tyson has recently been experiencing lately with several misses on their earnings. However, if you do understand that inflation inflated prices of animal feed while shipping costs have skyrocketed and hiring for cheaper labor just isn't really what it used to be, we can ultimately get to where Tyson's financial position is right now, which is stressed, and we can see that they're down 17% year to date, trading for $52 per share, with the PE ratio at 12.2. And while you're scared to invest, hedge funds are beefing up their portfolios. Now listen up, it may take some time for Tyson to recover, but this is why I enjoy dividend investing, because right now it's a great time to buy and await an economic recovery to enjoy Tyson's dividend coming in at 3.61% worth of a dividend yield. Next up, let's get into the one company that loves logistics more than any other. It's United Parcel Services, or UPS for short, which doubles as their ticker. Now nonetheless, UPS, one of the largest shipping carriers in the world, is a standout investment in terms of its reliability and profitability. It's a name that we can all just continue to trust, and while it's certainly always impacted by consumer trends as well as supply and demand shifts, that just means we get more opportunities to invest in it as investors. Like right now, its share price is idling around $171 per share, which is down from over $190 just a month ago. Well, with that, the price to earnings ratio is even sitting at 13.9. But looking ahead, even our latest consumer confidence report is depicting strong demand to come in due time, which is where shipping demand will also increase. So here we are with hedge funds buying more, and moreover, just plenty of bullish analysts, with a share price rising back up to $195 per share. That's almost 14% worth of upside right there. And until then, it's all about that dividend at a dividend yield of 3.6%. Now, while we're on the topic of shipping, logistics plays a major role, but without the packaging to ship anything at all, UPS would be done for. So let's dive into Packaging Corporation of America, ticker symbol PKG, which provides all the packaging solutions necessary for successful shipping. After all, just as the company's slogan reads, box isn't just a box. But in all seriousness, I can tell you that similarly to UPS, Packaging Corp has also taken a hit recently, falling from $144 per share to $127 per share within the span of a month, with a lower PE ratio hovering around 12.2, which again, as a longer-term investor, means opportunity here, with analysts seeing more upside in the near term, with a share price rising back up to $130 per share and then some. But really, it is the dividend that we want to focus on today, with a dividend yield coming in at 3.93%. Coming in at dividend stock number 6, it just may be one of the riskiest of bets we're going to take today as a financial sector investment, but let's talk about Fifth Third, ticker symbol FITB, which is in the retail and commercial banking space, involved in lending services and investment advisory that, given all the recent regional banking fears, has really been taking a bit of a hit at $25.26 per share, with Fifth Third's price per earnings ratio coming in at just 7.3. However, as of roughly 28 days ago, even an insider at the director level Payroll made an informative buy, with hedge funds continuing to pour millions into this financial sector investment. But that isn't all. Analysts also have optimism around Fifth Third, as it's expected to rise to $34.07 per share. That's nearly 35% worth of upside potential. But until then, we're going to enjoy their dividend because it's coming in at a whopping 5.11%. And last but not least, because of the high likelihood of inflation remaining far above the Fed's inflation goal of 2%, I want to talk real estate, as investing into real estate is ideal during high inflationary periods. But I also want to continue to play it safe with a reliable investment as well. And therefore, I want to break down the monthly paying Dividend Stock Realty Income, ticker symbol O, which is my real estate investment trust of choice, given its sheer size within the portfolio of theirs consisting of over 12,000 properties that touch all 50 states and internationally as well, touching into the UK and Spain. And moreover, they have an incredibly strong occupancy rate of 99% and over 1,200 clients. It has the strongest moat that an investor can really ask for in this type of environment. And as of this video, it's under $60 per share, inching closer to its 52-week low, trading for $58 per share, which is why plenty of hedge funds continue to pour money into this REIT, with plenty of optimism set forth by analysts as well, as they target a share price of $69.75 per share. That's nearly 20% worth of upside. Now, investors, an investment into realty income allows you to really kick back and enjoy a monthly dividend, with its yield coming in at 5.09%. And there you have it, investors, the 7 dividend stocks to add to your watch list and conduct your own due diligence on if you're looking for steals and deals in the market right now. Of course, let me know what you think of these dividend stocks by simply commenting down below. And don't forget to tap on that thumbs up button if this video brought you any value. Now also subscribe to never miss a single video, or you could just simply click right here for more.